Dear students, this is your faculty, Dr. Shweta Srivastava, Associate Professor, School of Management, BBD University. Today I am going to discuss with you the basics of investing, part 2, for the paper Investing in a Stock Market with the code GE37807. Students, in the basics of investing part 1, I've discussed with you why do we need to invest and on what parameters a security should be selected. So in this lecture, I'm going to discuss with you the different asset classes which you can choose depending upon your risk appetite and your financial objective. So, what are securities and what are not? So, students, the financial instrument which can easily be traded in the market is a security. But you can get financial loan on the basis of your fixed deposit, insurance policies and provident fund. But they cannot be traded in the market. So, you cannot take the benefit of market. So basically, securities can be categorized into ownership instrument and a debt instrument. So the first is equity shares. So equity shares means you have equal rights for the voting. So this is the most risky security which can be used for an investment opportunity. Second, we have preference shares. So, preference shares have the preferential right as to like premium, right? So, these shares have the preferential right while the distribution at the time of liquidation. Debentures are the debt instruments or bonds. So, the difference between debentures and bonds is very simple. So both of them are debt instruments. It means the company is taking loan from the investor. But in case of bonds, they are more secure as they have some kind of collateral against this. But debentures are debt instruments which are open, they don't have any collateral. Mutual fund units. So mutual fund, as the name says, is a collection of funds which is created by investors. So mutual fund is very popular nowadays. This is the indirect method of investing in equity or debenture. We have different kinds of mutual funds like hybrid, like index, like participative. So mutual funds are yet another category of investment opportunity. Next we have government securities. Government securities are generally traded in the gilt market. So they are generally secure. So in others we have derivative instruments like futures, options and swaps. So students, you have to understand that in whatever security you are investing money, it should be properly analyzed because they all have different kinds of risk exposure. So what is a security market? In general, market is a place where buyer and seller meet with each other. Nowadays, with the technology seeping into our systems, these markets can be on online platforms. So generally, market is a place where things are bought and sold. So similarly, securities market is a market where securities are bought and sold. But we have a different kind of system which controls the security market. So we need regulatory bodies and there are various participants, agents, entities and products in the security market. Security market is a part of capital market. So we all know that the requirement of money can be of two types. One is long term and another is short term. So there are two types of markets, investment markets prevailing in India. So one is capital market, which caters to the needs of long-term investors, and there is a money market which caters for the requirement of short-term money requirements. So why do we need security markets? See, if we look at the financial system, so at one end we have uh, providers of funds. These persons are the investors or people like you and me who have surplus funds. So, as I told you in the previous slide, the previous lecture, that we need to invest because we want our money to grow, because we want our money to fight with inflation, because we need to secure our future. So because of these reasons, we have to invest and we have surplus funds. But where to invest? Who are the users of funds? So at the another end of the financial system, we have users of fund. These users of fund may be the companies, the entrepreneurs and the big corporates who need money for expansion, diversification, automation, mechanization. And so, how do we provide money to these users of funds? For that, we need proper conduit, and this conduit may be of banks, financial institutions, brokers, agents, stock exchanges. So, the entire phenomena or the entire exercise takes place at one place, that is security market. So, security market provides opportunity for entrepreneurs or businesses to raise capital for their business. And at the another point of time, it gives opportunity for the investors to avail market opportunities to invest in the stock market so as to save their future or grow their money. Moreover, it provides them opportunity to take back their money as and when needed. So all these phenomena takes place in security market. So that is why we need a place where we can provide money to those who actually need it. So there are two types of markets, one is primary and secondary. So primary market as usual is a place where we get the things first hand. So primary market is a marketplace where corporations issue their first security, like the issue of shares, like we generally call IPO. So they issue IPO for soliciting capital to meet their necessary long-term requirements, right? It plays a motivational part in the mobilization of savings in the economy because most of the investors are eager to invest in IPO. Secondly, secondary market is a place once the security is traded in the market, then it becomes the secondary market. So after IPO is sold in the market, it goes into secondary market. So secondary market is a place where the already traded security is further sold. So, as I told you, the secondary market is a prototype of capital market where debentures, shares, options, treasury bills, commercial papers are patronized or sold amongst the investors. The secondary market can be an auction business where the business of bond is functional through a dealer market or the stock exchange, usually called over the counter. So you can buy the securities OTC, like over the counter. So in primary market, the security are sold generally by the merchant banks or the company itself. But in case of secondary market, the purchase is done over the counter. So students, this is an overview of the Indian security market. All of us know that the market regulator is SEBI. So under SEBI, we have stock and commodity and derivative exchanges like BSE, NSE, MSE and commodity exchange. Then we have, these are the various exchanges. Then we have depositories. Depositories are the place, is the place where, this is a place where the securities are collected in their dematerialized form or the electronic form. Then there are other intermediaries like stock brokers, mutual funds, investment advisors, AMCs, so RTAs. So these are the various players in the security market and in total they are the part of Indian financial system. So students, thank you for